Hello everyone, welcome to today's session. So today we will continue chapter 6 and on that line we will start discussing SA 570. So anyone before we start, anyone has any doubt with respect to last section, that is SA 560? Anyone? So if you guys have any doubt with respect to the previous session or previous topic, you can write in the chat. I can, take up accordingly once you'll write it down. Okay. So let's start for the today's session and let's continue chapter 6. Now, our next topic for today is SA 570. Okay. Going concern. Very important. Very, very important one. Okay. Now, some financial reporting frameworks, provide explicit requirement to the management, okay, to make a specific going concern assessment or assessment. Like whenever I say a going concern assessment, I will say, I will instead write that entity's ability to continue as a going concern. So let us see this one. Sorry. So when I say going concern, I use the term entity's ability to continue as a going concern. Okay. Instead of just going concern. SA 570 going concern. Sorry. So now there are two things in, when we want to understand SA 570. Number one, responsibility of management. Okay. Number two, and responsibility of the auditor. Now, responsibility of management, made different. It is practically same because SA 570 guides us with respect to the auditor's responsibility. Okay. Now, I hope you guys have read SA 570. Okay. You guys have, gone through the study material. If not, then, just participate and pay attention a bit over here. You will understand what we are discussing. Okay. Now, before I proceed further, as I told you, there are two sides of this particular standard. One, which talks about the responsibility of management. Second, it talks about the responsibility of the auditor. You tell me who has the prime responsibility to perform the going concern assessment. Okay. So the first question is, who has the prime responsibility okay, or you can say first responsibility to perform concern assessment. Who has the responsibility to perform the going concern assessment? Very good, Tanisha, Salesh, Shruti, Mohammed. Very good. Okay. So, it is the management's responsibility. So, I have management responsibility to perform. Now, again, that's what I was saying. Instead of writing going concern assessment, I will write, okay, I will write assessment, okay, of an entity's ability to continue as a going concern. Instead of writing going concern assessment, I will write entity's ability to continue as a going concern. An assessment of entity's ability to continue as a going concern, and the reason because understand this as a keyword. Important keyword for this whole standard. I'll highlight as a yellow for you guys, blue for you guys. So this is an important keyword for this whole standard. Assessment of an entity's ability to continue as a going concern. Why? Reason because I will not use this term going concern assessment. I'll use the term that entity's ability to continue as a going concern. Understand that too. Okay. Now, if this is the case, then my next question comes is, okay, what is the responsibility of auditor? Okay, what is the responsibility of auditor with respect to going concern assessment? What is the responsibility of auditor with respect to then going concern of assessment? What auditor is required to do then? If management is required to perform the going concern assessment, then what auditor is required to do? Come on, guys. What is the responsibility of auditor then? If I say the responsibility of management is to perform going concern assessment, then what is the responsibility of auditor? Very good, Tanisha. Very good, Surya. Good, Shruti. Very good. Good, Mohammed. Very good. Yeah. So, you guys have provided the correct answer. So, whatever assessment management has done, whatever assessment this management has done, auditor has to evaluate that. Auditor will evaluate the assessment performed by management. Okay, that is here. Now, you guys tell me, do you think it is mandatory to perform going concern assessment or an assessment of an entity's ability to continue as a going concern, like for management? Is it mandatory for management to perform this assessment? What do you think? Is it mandatory for management? Come on, guys. What do you think? Is it mandatory for management to perform going concern assessment or an assessment of an entity's ability to continue as a going concern. Come on, guys. Good Mohammed, good Manoj. Okay, Shruti, good. Good Geeta. Good Tanisha. Okay, good. Very good. Okay. And what about auditor? So if it is compulsory for the management, then by default it will become compulsory for the auditor also, for sure. Okay. So it is compulsory for the management. It is compulsory for the auditor. Mandatory for the auditor. Fine. But in one case, it is not mandatory for the management and auditor. There is one exception. There is one case where it is not mandatory for auditor also. It is not mandatory for management also. Can anyone tell me that example or that case where management is not required to perform this assessment? Can anyone tell me that that case or that scenario? Very good, Mansha. Very good. Come on, guys. What do you think? Which is the scenario where it is not mandatory for the management? Good, Tanisha. Good, Savitri. I'll tell you, Savitri, there are other materials also with respect to, from where you can read. So you can go, on the website of ICAI website, and there is something, known as committees, non-standing committees, and you can go to the audit committee, audit quality board. Over there, you will find a lot of publications already, issued by ICAI on this particular area or any of these standard. So you can refer to those publications which has more detail in that. Or you can, go and check on the ICAI website the bare text of the engagement and quality control standards. So that is also, you can refer at there. Okay. So when I talk about, areas where, this is not mandatory, it is, similar. It is kind of similar when the company is into the liquidation, or when the company is not using going concern assumption while preparing the financial statement. Fine. Okay. Now, the question comes is, okay, auditor is required to evaluate. What else is the responsibility of the auditor along apart from this? Because, okay, I have, validated the management's assessment. Am I required to do something else? So the standard says, yes, you are required to do something else apart from this. Apart from this, when you do the evaluation, okay, of the management's assessment of going concern, or assessment of an entity's ability to continue as a going concern, you are also required to check one more thing, and that's a very important thing. So standard says that go and check whether a material uncertainty exists related to events and conditions that may cast significant doubt, okay, that may cast significant doubt on the entity's ability to continue as a going concern. Now, let's say you are performing the assessment, okay. Now, there would be a scenario, let's say when you perform, not always your assessment will give you yes or no. Let's say, for example, you are performing the assessment. Take up one example. So let me take one example. XYZ Limited, okay, was incurring heavy losses, okay, from last 5 years, and due to which it had negative net worth. Negative net worth. Okay. On 31 3 no on 31 1 2023, XYZ Limited received a contract for supply of goods, okay, for supply of goods, and uh, for supply of goods that will cover, or that will help entity in recovering all the losses. However, the entity was not sure whether they will be able to fulfill the contract. Okay. Now, in this scenario, entity is there and there is a contract, but entity is not sure whether they will be able to fulfill the contract. You, as an auditor, kindly assess the entity's ability to continue as going concern. Again, so you are required to assess the entity's ability to continue as a going concern. Now, let's say assessments outcome. Now there could be two outcomes. One no, one yes. You tell me whether your outcome is yes or no based on the given facts and details. So the question is that XYZ Limited was incurring heavy losses from last 5 years, and due to which it had negative net worth. On 31/1/2023, XYZ Limited received a contract for supply of goods that will help entity in recovering all the losses. However, the entity was not sure whether they will be able to fulfill the contract. So, as of now, entity is not sure whether they will be able to fulfill the contract. How will you perform the assessment? That the assessment with respect to entity's ability to continue as a going concern. Whether will your outcome will the outcome of the assessment be yes for you or no? Come on, guys. What do you think? Would you say yes, no? Come on, guys. What do you think? Okay, Tanisha. Good, Salish. Good, Charu. Good, Geeta. Good, Savitri. Very good, Shruti. Come on. Very good, Tanisha. Very good. So, after seeing this example, okay, I don't have a definite answer whether entity will be able to continue or use of the going concern assumption is appropriate or not. If the assessment outcome is yes, that means use of, if the assessment's outcome is yes, then just a minute. Bring this part over here. Then use of going concern assumption is appropriate. Okay. So when I say yes, means the use of going concern assumption is appropriate. And when I say no, in that case, management should not use the going concern assumptions. Going concern assumption while preparing FS. Okay. That is yes and no. But in this scenario, there will be one third another area or third another point. That is, I'm not sure. Okay. So, not sure, kind of. Either I could say yes, either I could say no. And there is the third one, which I say not sure. And when I say I'm not sure, but there is something, but I'm not sure. There is some event, there is some, condition, but I'm not sure whether it will impact, going concern in such a way that, I should say to management, please do not use the going concern assumption. So I am not sure as of now. Okay. So instead of, not sure, I would say that a material uncertainty. Material uncertainty exists. Okay. It is related to the events and conditions. Okay. The event and the condition in our case is negative net worth plus not sure with respect to fulfillment of order. So on one hand, the negative net worth is pointing that, okay, do not use the going concern assumption. On the other hand, order is something, that contract is something that if entity is able to fulfill, they will recover all the losses. So kind of, showing, okay, the entity, if it fulfills the order, may be able to continue as a going concern. So together both, they are creating such conditions and events, okay, which, which are casting. These conditions and event are casting or that may cast significant doubt on the entity's ability to continue as a going concern. So these together are casting significant doubt. I am not sure. There is a doubt that entities on the entity's ability to continue as a going concern. So that's it. There is a material uncertainty exists. Okay. And remember, these are the words that you should use in the same way. A material uncertainty exists related to the events and conditions, like this event and condition of contract plus negative net worth that may cast significant doubt on the entity's ability to continue as a going concern. Now remember one thing, wherever I am using, different terms here, I am talking about, I am using in, connection with materiality. Why? I will show you something. I am saying material uncertainty. I am talking significant doubt. So the doubt is big. Material uncertainty is also material, very big. I'm not talking about, small things. I'm talking about big things over here, material and significant things. Okay. So a material uncertainty exists which relates to the conditions and events that may cast significant doubt on the entity's ability to continue as a going concern. Means I'm not sure. And material, there is something material uncertainty and there is a significant doubt. I'm not sure. Okay. Now, so auditor needs to conclude that is there any such scenario where this material uncertainty exists and there is a doubt, significant doubt? If yes, then auditor is required to report. Okay. Now that is something, the base for by SA 570, that what is the responsibility of the auditor? Okay. What's the role of auditor? Auditor's role is to evaluate the assessment performed by the management plus identify whether a material uncertainty exists relating to the events and conditions that may cast significant doubt on the entity's ability to continue as a going concern. So now you understood the terms that we are using over here. Number one, uh, this this term, that material uncertainty exists related to the events and conditions that may cause significant doubt on the entity's ability to continue as a going concern. Very important. Second, assessment of an entity's ability to continue as a going concern. Clear? Any doubt till now? Any doubt? Any doubt, guys? Any doubt? Okay. If no doubts, let's proceed further. Now the next question comes is how to perform this. I know I have to perform the going concern. I need to evaluate management assessment. I need to identify whether a material uncertainty exists. But the question comes is how? What I need to do this. Okay. So how? So my question is what you will do. What you will do. Okay. Either to evaluate assess. So what you will do to evaluate the assessment that has been performed by the management. How you will evaluate the management's assessment? Let's go step by step. Okay, so we'll pick up the first assessment performed by the management. How will you evaluate the assessment that is performed by the management? How will you perform or assess the evaluate the management assessment? Come on, guys. Okay, good Tanisha, very good. Good Mancha. Come on guys, how will you assess? Very good Charu. Come on guys. Okay, very good. Very good Mancha. What else? How will you perform the assessment? Okay, let's understand with an example. Another question. Okay. So the question is XYZ Limited was a market leader in manufacturing of steel rods. Okay. So XYZ was a market leader in manufacturing of steel rod. XYZ Limited was having hold on 25% of market share. Okay. So they were having hold on 25% of market share with respect to total market supply. So if you see or if you consider supply side, so they were holding 25% of the market share. Okay. Now, XYZ Limited was planning to expand its operations and were looking investors to, were looking investors to, uh, or you can say, were looking investor for infusion of funds. You know, further, further funds in the business. Okay. Now, some financial figures, particulars, amount. And this is FY 22-23. Share capital, as usual, 10 lakh. Okay. INR. Reserves, 25 lakh. Together, all the reserves. Okay. Non-current liability, This is majorly secured loan. Okay, from bank or financial institution. That is, instead of writing full numbers, I'll just write in terms of lakhs only. Five lakhs. So the term loan is, or non-current liability is, let's say rupees 45 lakhs. Current liability, let's say rupees 30 lakhs. Then you have a non-current assets, let's say rupees, and this is majorly fixed asset, FA. Okay, this is majorly fixed asset. Let's say this is 25 lakhs. Then you have a non-current current assets, that is majorly, there are bifurcations in this. So total it is 85 lakhs, out of which inventory FY 21, 22 and FY 22, 23. I'm giving you the comparative numbers also of the inventory. So out of 85 lakh in FY 22, 23, okay, the inventory is, let's say, 50 lakhs. In FY 21, 22, the inventory was 65 lakhs. Okay. Rest are the other balances. So this is something, the financial figures for the company. And you have XYZ Limited, who is a market leader, who is supplying, the steel rods, has a 25% market capture. I'll give you some ratios also if you want. Let it be. Okay. We'll discuss the ratios later on with the later part of this question. But as of now, this is the part that you have these figures. Now, based on these figures, we need to understand the requirement. We need to understand, okay, the assessment that is performed by the management. Now, in this case, let's say, I'll write it over here. Based on these items, management concluded that that there are no significant doubt on entity's ability to continue as going concern. Okay, so based on these figures and data, management identified and said, okay, I'm fine, and there is no doubt on entity's ability to continue as a going concern. I'll just update here. Okay. So this is the data. This is the scenario. Now management has performed its assessment, and we need to evaluate the same. How will you evaluate? What you will do? We need to understand the evaluation of the. We need to understand how to evaluate management's assumption or assessment. What you will do in this scenario? Come on, guys. What you will do in this scenario? How will you evaluate this scenario with respect to management's assessment? Come on. In practical scenario, also it's not always gray. So it's not always black and white. At times you will get a scenario where it is totally gray and with a various shades of gray. So at those in those times we need to understand how to evaluate management's assumption. See, when it is black and white, it's easy to take a decision. In case of gray areas or the situation where it is not clear, it is very difficult. And that is we need to understand how to perform the going concern assessment and how to evaluate, rather how to evaluate management's assessment. Come on, guys. Come on, guys. Okay, good, Manoj, very good. How will you perform? How will you evaluate management's assumption? That is very important over here. Management assessment. How will you evaluate management's assessment? Come on, guys. How will you do the assessment? Good, Shruti, very good. Good, Mancha. Anyone? Anyone else? Very good, Charu. Very good. Very good, Shruti. So the answer is not straightforward and simple yes or no answer to this. The answer goes to a deeper level. We need to understand item by item. Number one. So in order to evaluate management assessment, you need to first understand in how the assessment has been performed by the management. So in order to evaluate management's assessment, first of all, I need to evaluate how the management has performed the assessment. from where they have taken the data. So let's say, for example, their data is based on the financial figures, these financial figures. So my first question will be, are they audited numbers? Yes, or like, I need to understand whether the financial figures that is there are these audited numbers. Number two, management is having good market share. Very that's very good part that management is having a good market share. But my second question is this profitable? What if I have a market share but at a loss? It could be a scenario because let's say, for example, there is a company which is a loss-making company and it is capturing the market share based on the cash burn. Like it is, burning the cash, giving discounts, offer promotion or something like that, or goods at the cheaper rate to capture the market share. So as of now, if I have a market share, is this market share profitable? And they required the funds. Okay, so somewhere we saw that they need infusion of further funds in business. Okay, I will understand this in detail. Okay, how much funds are required and what is the necessary, necessity of this. Okay, now then comes to this particular part on the numbers actually. I'll go and I'll check this 45 lakh. I'll say, okay, what is the due date for this? What if this is becoming due in next 6 months? What you will do? Whether the company has that much funds? Answer is no. Appears not. Reason because if this is getting due in next 6 months, so I need to pay 45 plus 30, 75 lakh rupees. And out of 85 current asset, I have only 65 of inventory. So rest, 20 might be cash in bank, might be others. I don't know as of now. But as of now, it appears that the company doesn't have a cash on hand if it is becoming due within 6 months. So I need to understand when this is becoming due. Okay. Then this current asset. Okay. Again, the question comes is, how old are these? See, in manufacturing industry, it's not only about the amount of the assets. It's about the condition and the quality of the assets that you hold. If your assets are older assets, technology is old, and if you if it is a time to upgrade, then it's a very big question because upgrades require a huge capital investment, and if you do not upgrade, it will either increase your operational cost or either it will impact your production. So again, the question comes on the non-current asset is how old are these, whether you need new technology, whether you need, something else. So let's say when I installed the fixed asset, the amount of the asset was something around, let's say 3 crore, 4 crores. Over the time, it got, depreciated, and now I have only left with 25 lakhs from 4 CR. So having 25 lakhs in the books of accounts is irrelevant till the time you don't see the actual condition of the asset. So how old are these? That is something I need to understand. And now the major question comes in with the inventory. I could see huge inventory stock, huge inventory. Now the question comes again is this slow moving or non-moving inventory? Any provision required? So So you will say all these are the audit related things. Then why we are covering in the going concern? I understand this is related to the audit of different areas, but again, these, if you see all these together with a bigger picture, you will come to know about the going concern assumption that, or at the evaluation of the going concern estimate made by the management. So based on the answers of these questions, you can evaluate management's assessment. Are you getting my point? So in order to evaluate management's assessment, you need to, okay, understand how the assessment has been made by the management. Okay, what is the underlying data? What is the underlying assumptions taken by the management? And you need to, validate those assumptions, data, and whatever working has been done by management. So for that, you need to perform an inquiry with the management. Okay, discuss with the management whether management has identified these conditions individually or collectively that are casting significant doubt. Okay, understand and inquire management whether conditions exist and how management is making sure that you still the company or the entity is able to continue as a going concern. So you need to ask these questions from management while evaluating the management's assessment. Clear? Any doubt? Any doubt, guys? And SA 560 will also a very important and play a very good role over here. 560 is subsequent events. So in after the end of after the close of financial statement, that is after the date of financial statement, 31st March, I need to still look for the events that may cast or that may point towards the material uncertainty. So till the date of audit report, I am required to remain alert. Or if anything comes to my knowledge, then I need to understand whether appropriate adjustment or disclosure is required to be made or not. So I say 560 and 570 together, also are important part. Any doubt, guys? Any doubt? So whenever you identify, okay, now the second part is whether a material uncertainty exists. So let's say you identified some events that are casting significant doubt. Okay, you have identified some events that are casting significant doubt for the significant doubt on the entity's ability to continue as a going concern. So you say there is a material uncertainty. There is a material uncertainty. Okay. Now the question comes is, if there is a material uncertainty, now what you will do? Okay. So I'm saying there is a material uncertainty. You identified this material uncertainty. I have identified. Let's say for example, okay, material uncertainty have been identified. Let's say in this scenario, let's go back to our question. I'll tweak a bit the question a bit, and then we'll see. Let's say in this question, I was talking about this particular non-current liability. So additional information. Additional information is that the secured loan is required to be paid in next 12 months, and for that the company is looking for more funds. As per company's budget for upcoming next 12 months, the estimated cash inflow from operating activities will be rupees 25 lakhs. So you have this additional information. Now everyone will say, okay, there is a material uncertainty which casts a significant doubt on entity's ability to continue going concern, because I need to pay 45 lakh rupees in next. Let's say, let's amend this number also, to make it more evident. Instead of 45 lakh, I'll make it 85 lakh to make it more evident. Now I need to pay 85 lakh rupees within 12 months. The only cash flow that I'm expecting out of operating activities is 25 lakhs. And I might have something, 20 or 15 odd lakhs as a cash balance. So there is a significant doubt. Okay, there's a material uncertainty related to events and conditions that are casting significant doubt on entity's ability to continue as a going concern. Now what? I identified material uncertainty. I identified conditions. What should I do? You identified these conditions. What you will do now? Okay, in this question, we identified the conditions. Fine. In this scenario, we identified the conditions that are casting significant doubt on entity's ability to continue as a going concern. So I have a material uncertainty that I'm calling. But what to do now? What should I do? Hmm. Come on, guys. What should I do? Okay, good, Charu. What else? What should I do now? So, Savitri, you perform the assessment. Now you are saying there are events and conditions that are casting significant doubt on entity's ability to continue as a going concern. So you have a significant doubt. Now what? I identified there are conditions which are casting significant doubt. Now what? Okay, Savitri. But what they will do after change, like what you will ask them to change. Management is saying, let's say, for example, in this case, management is saying there is no material uncertainty. Management is saying everything is fine. So management assessment is appropriate. Management is saying, for me, everything is fine. You have identified significant, you have significant doubts. Now what? So, sorry, management's assessment. So that is, management is saying everything is fine. So no doubt, no significant doubt. Okay. Now auditor's assessment. Auditor is saying, yes, I have significant doubt. Now what to do? Okay, Mancha. Now what should I do? Come on, guys. Now what should be done in this scenario? So there is a difference. Okay. What you should do? This is not matching. So auditor's assessment and management assessment is different. And your assessment says you have a significant doubt. Now, what are the next steps? What you will do? Okay, you identified there is a doubt. What you will do now with respect to that? I identified there is a doubt, but what should I do now with respect to this? Come on, guys, quickly try at least. I will suggest try so that you will be able to understand. See, I can uh, just mention the theory what is required. Done. No, but my target is to you give you practical experience, practical insight, and you know how it is done actually. Okay, it's not plain yes or no, black and white in real life also. It's not. Trust me. So you need to, understand how actually this is done. Okay, good Mancha, good Savitri. Good Geeta. Good Charu. Okay, good Mohammed. Very good. Okay. So I'll tell you what I will do. First of all, if my assessment is different than the management's assessment, I'll understand the reason for the same. Okay. So what I'll do is I'll write over here additional procedures. Okay. When events or conditions are identified. Okay. When events and conditions have been identified that are casting significant doubt on entity's ability to continue as a going concern, then what should I do? As an auditor, what should I do? So, at that particular point in time, what you are required to do is, first of all, check whether an assessment has been performed by management. Okay. Now, there could be two scenarios. I'll discuss both. One is yes, another is no. It may happen that management might have not performed the assessment. It may happen that management might have performed the assessment. Totally depends upon the case to case basis. Either management might have performed the assessment, either not. And again, it is not necessary that the response or the outcome of the management assessment should match your assessment, your evaluation. So let's say you identified certain events and conditions. Now you went to management. Management tell me what is your assessment. Management said I have not performed anything. I don't see a need to perform any assessment. And at times, management will come with this kind of response. I don't see any, need to perform these kind of assessments over here because my company is a 10-year-old company, well established in the market. We don't have anything to, worry about. They will directly say you like this. So first understand whether management has performed or not. Okay, let's say management has not performed. Then intimate the management slash those charged with governance. Okay, about the conditions and request them to perform. If they have not performed, okay, and they will perform, and we'll go to the yes part. So now, what once they perform, or let's say they have performed. So first of all, understand management's future actions. Okay, sorry, yeah, sorry. Understood management future actions and whether all events are considered in assessment. Means whatever events you have identified have been considered. Number two, whether the outcome of these plans is likely to improve situation. Number three, whether management's plan are feasible. So, for example, let's say in our case, okay, when management said, okay, they have a going concern, they do not have any doubt, or management assessment was no significant doubt. Reason because they will definitely identify investors and will get additional funds. Now, in order, let's say management has taken this assumption. So first of all, I need to understand why there is a difference. Okay. So first understand why there is a difference. Let's say I identified the reason for the difference. Okay, this is the reason that management is saying, okay, they will get the funds in future, they will have everything in future, and that's why they do not worry. I will go and I will evaluate this particular, management plan. So I will evaluate what could be the outcome, possible outcome. Okay. So I'll say chances of being favorable and chances of unfavorable. So how much percentage I think, okay, management will be able to get the funds. I can use probability. That is perfectly fine. Now, based on this, I need to understand, okay, if my probability is higher for, like chances of being favorable is higher, I might, accept the management's assessment. But what if the chances of being unfavorable are not higher? Or this particular plan is not feasible? Means management is saying something, that they will identify investors, but who will invest in loss making company or company which is on the borderline? Why someone will invest? Or let's say, for example, management is looking for investors to whom they can only, they can provide the equity, but the valuation that they are doing is very much high compared to what actual valuation is. So no one will invest. So you need to understand the feasibility or the possible outcome of the action of the that is, management is planning, and you need to understand what is the difference between management's going concern assessment and your evaluation. So you need to understand management plan for the future action in relation to going concern assessment, whether the outcome of these plans is likely to improve the situation, and whether the management's plans are feasible in circumstances. Then understand the cash flow and forecast. Okay. So evaluate the future cash flow and forecast if prepared. Some entities prepare, some not. So if they have prepared, then evaluate that. And once you will evaluate this particular thing, this is the calculation. Okay. If you will go and evaluate the calculation, then you need to make sure and you need to look for few things, because this is something I call it IPE, information produced by the entity. So if there is an information that is I'm using which is produced by the entity or the calculation that is done by the entity, I need to check for underlying data with respect to completeness, accuracy, okay, and authenticity of that particular data, or you can say completeness, uh, accuracy, and integrity of that data, kind of. So I'll use these terms, CIA or CCA, that is CAA, sorry, completeness, accuracy, and authenticity, or completeness, integrity, and authentic accuracy of the data. Then you need to understand adequate support for assumptions taken in calculation. See, it's a forecast, and then it's a budgeted forecast. For sure, it will have assumptions. Then we need to understand the basis for the assumptions, adequate support for the assumptions. Okay, if I'm evaluating the future forecast, evaluate any other additional information you have on your hand. Okay, and obtain written representation. So that is the thing we are required to do when we identify conditions or events that cast significant doubt on entity's ability to continue as a going concern. Clear? Any doubt? Any doubt, guys? Come on, guys. Any doubt? Any doubts? Anyone? Yes, no. See, we are trying to understand how, till now, we were trying to understand how we need to evaluate management assumption or assessment, and what we need to do as a procedure when we are evaluating management's assessment, or we are identifying certain events and conditions. Any doubt, guys? Any? No? Okay. If no doubts, let's take a quick 10-minute break, and after the break, we'll gather back and continue the session. Okay? Let's take a quick 10-minute break. Hello, everyone. Welcome back. Let's continue the session. Now, the next part that we need to understand is with respect to the reporting requirement. Okay, with respect to the reporting requirement. Now, again, when I talk about reporting, let's understand practically. I'll show you some one audit report, and then based on that, let's understand how the reporting works here. Okay, just give me a minute. Let me pull up the audit report. So basically, this reporting will help us understand once we identify the conditions or events, then how to or what to do with these conditions and events. Please do not pay attention to the name of any entity. This is, just for an example, publicly available data, nothing else. Okay. So this is independence auditor report. Okay. Now let's understand first of all, this particular report, and let's focus on one area that I want to highlight over here. Let's go to the consolidated one. Okay. So we have a independent auditor's report, and this is the consolidated one on the consolidated financial statement. Okay. Now, what I want to highlight over is this qualified opinion. Now, let us understand why there is a qualification. Okay, by through basis of qualified opinion. So we draw attention to note 41 of the consolidated financial statement, which set out the fact that the XYZ don't focus on the name of the entity. It's just for an your understanding that has incurred losses during the year end 31st March 2023 as well during the previous year. Its current liability exceeds the current asset. Purchase power agreement with Adani Electricity Mumbai Limited stands terminated with effect from December 16, 2019. Its plant remaining unoperational since January 15, 2019, and certain lenders have filed application under the provisions of IBC and Debt Recovery Tribunal. These events and conditions indicate that a material uncertainty exists that may cast a significant doubt on the entity's ability to continue as a going concern. However, the financial statement of the entity have been prepared on going concern basis for the factors stated in the aforesaid note. However, we are unable to obtain sufficient and appropriate audit evidence regarding the management use of going concern assumption in preparation of the financial statement of the entity. So there are three things mentioned over here. Number one, that there are some conditions and events specified. So what are those conditions and events? That the entity has incurred losses, its current liability exceeds current asset, purchase power agreement stands terminated, plant remaining unoperational, lenders have filed application under IBC. Okay, so these are certain conditions and events that exist, okay, that are casting significant doubt on entity's ability to continue as a going concern. Now, these events and conditions indicate material uncertainty. And together, these events and conditions indicate material and uncertainty. Okay. Now, however, entities' financial statement have been prepared on going concern basis, which is specified in Note 41. Now, we need to understand what are those bases. But auditor is unable to obtain sufficient and appropriate audit evidence regarding management use of going concern assumption. So, entity has prepared using going concern, but auditor is saying we are not able to verify that. So, let's go and understand what is there in the Note 41. Note 41. Just a minute. Let me pull up Note 41. Over here. See, the company has incurred losses during this year as well as the previous year, and its current liability exceeds current asset. Company's ability to meet its obligation is dependent on the outcome of material uncertain events. Like these appeals are there. Okay, dated this. The matter is tagged with the appeal, this, and all that detail is given. Everything is given here. Okay, so this is one, a big, very appeal detail over here. Application filed by lenders before NCLT for the provision of IBC. Okay, seeking debt resolution. Again, some appeals, details are there, and dismiss and this pronounced. So facts and backgrounds have been given. Okay, and has been listed. In the view of the above, financial statement have been prepared on a going concern basis. So here some case laws and everything has been cited. Okay, with respect to what you say, like why they think the material uncertainty, the going concern assumption is appropriate. So if you see, like for example, I show you something. Uh, uh, yeah. Entity believes that in civil appeal this and petition number this, it has a strong case on laws and facts and expects a positive outcome. Okay. So they are saying they expect a positive outcome on these cases. Kind of, they are expecting positive outcome. If you see over here, they have said that okay, next hearing date is this and the response is awaited. So at one place they are saying the response is awaited. On other place they are saying they are expecting a positive outcome. Okay, and another case here, the entity has been in discussion with all its lenders for debt resolution outside the CRP process. So something they are trying to say that that they are doing, there are case laws and everything is there, but as per the auditor they are not able to verify these things, or they are not able to obtain sufficient and appropriate audit evidence regarding this, and hence they are saying that they are not able to obtain evidence with respect to management use of going concern assumption. So let's go back to the note. So what they are saying is, however, we are unable to obtain sufficient and appropriate audit evidence regarding management use of going concern assumption in the preparation of financial statement. That's why they have qualified the opinion. Okay. So that is one of the way to report this particular area, basis of by way of qualification. Now, this was just an example for you guys to make you understand But usually how the reporting happens, that is very important, and we need to understand that part. Reporting for material uncertainty, and or going concern. Okay. So first of all, we need to understand based on the outcome, the details of the reporting. Okay. So what happens is, let's say for example, okay, now you identified some things and you have identified some events and conditions that are casting significant doubt on the entity's ability to continue as a going concern. Okay. So first of all, you need to understand that whether all the events and conditions individually or together that are casting significant doubt on entities' ability to continue as going concern. Okay, whether all the events and conditions individually or together that are casting significant doubt on entities' ability to continue as a going concern, okay, conclude or indicate that whether all the events and conditions are indicating that there exists a material uncertainty. Means that all the events and conditions that are casting significant doubt, means events and conditions that are creating doubt, are they together or individually indicating that there is a material uncertainty? See, there could be events and conditions that are casting doubt, but it is not necessary that events and conditions that are casting doubt will result in material uncertainty. So we need to understand this particular point, that it is not necessary that events and conditions casting significant doubt, okay, on entity's ability to continue as a going concern. I'll not write full, but I'm just showing you that casting significant doubt on entity's ability to continue going concern will always result in material uncertainty. So material uncertainty is different. Significant doubt is different. Understand that thing. When I say material uncertainty requires a disclosure. Doubts could be there, okay, and significant doubts could be there, entity's ability to continue as a going concern. But if you have a doubt and if you think management assumption is appropriate, then it's fine, okay. And when a doubt becomes such a important that its disclosure is necessary in auditor's judgment. Okay, because of the potential impact and likelihood of occurrence. In that case, that doubt becomes material uncertainty. Significant doubt changes to material uncertainty, kind of. So, based on evidence, okay, if the auditor concludes whether in his judgment a material uncertainty exists, okay, in that case, he needs to then follow some reporting procedure. Now, when I talk about material uncertainty, it is based on the magnitude of potential impact and likelihood of occurrence. So, when you have a significant doubt, which has which has magnitude of potential impact which has likelihood of occurrence, okay, and and which requires appropriate disclosure. Now, this appropriate disclosure could be based on either, based on the, in case of fair presentation or compliance framework or fair presentation framework. So, it could be based on fair presentation framework or compliance presentation framework. Compliance framework. So, if it is necessary, the appropriate disclosure is necessary. Okay, based on the fair presentation framework or compliance framework. In that case, if all the things, all the four things are there, it will result into material uncertainty. So, material uncertainty exists when the magnitude of the potential impact and the likelihood of occurrence is such that in auditor's judgment, it becomes necessary and appropriate disclosures of the nature and implication of uncertainty based on the fair presentation, financial reporting framework or compliance framework. Okay, if this is, is there like significant doubt, we have, magnitude of potential impact, likelihood of occurrence, appropriate disclosure, requirement, then it becomes material uncertainty for me. Once it has a material uncertainty, then I need to, understand what is the disclosure requirement. Because as I told you, material uncertainty requires a disclosure. Sorry. Okay. So as I told you, material uncertainty requires a disclosure. Now let's understand adequacy of the disclosures when events and conditions have been identified and a material uncertainty exists. Okay. So I am saying there is a significant doubt also and material uncertainty also. When I say material uncertainty, by default disclosure requirements comes into the picture. Okay. So let's say, for example, if I say material uncertainty exists, if I say material uncertainty exists, okay, in that case, or let's say, for example, I'll keep it in this way, material uncertainty. So one is exists and does not exist. So I have events and conditions, but no material uncertainty exists. So let me keep it here. Events and conditions have been identified, plus events and conditions have been identified, means significant, there's a significant doubt. But material certainty may exist, may not exist. Why? As I told you that, it is not necessary that all the significant doubts, okay, it is not necessary that all the events and conditions that are, giving rise to significant doubt will result in material uncertainty. So it is not necessary that, again, I'm repeating again, it is not necessary that all the significant doubts will result in material uncertainty. No, there is no necessity on that part. There is no compulsion on that part. It could have, it is possible that, there are events and conditions that are casting significant doubt, but they are of not of that potential, they don't have that much potential impact, or that they don't have that much likelihood of occurrence. That's why I'm not calling them a material uncertainty. Okay. That totally depends upon conditions and event. Whether these conditions and event are of such nature that they may become material uncertainty for the entity. So that depends upon the event. Okay. And I need to see the potential impact of the event and likelihood of the occurrence of the event. It's same like, misstatement. Let's say I have a one material misstatement, but whether that material misstatement is sufficient enough to give an adverse opinion, answer is no. I need to again evaluate the magnitude and likelihood of that particular, misstatement. Like what is the magnitude of that misstatement? Whether it's a pervasive. So materiality and pervasive, I need to see both. Okay, with respect to the misstatement. Same way, significant doubt. I need to see potential impact and likelihood of occurrence of that potential doubt to call it as a material uncertainty. It is not necessary that significant doubt will definitely become material uncertainty. No. Doubt means you have a doubt with respect to, entity's ability to continue because there are some events. For example, let's say there is some pending litigation. Okay. Now that litigation is an event or condition that is casting significant doubt. Okay. That event or litigation is casting significant doubt on entity's ability to continue as a going concern. Now, whether that litigation individually or in connection with other such events is of such nature that it may end up, a problem for the entity, or it may end up that, entity might get closed, or it may, discontinue, get bankrupted, or whatever. So is that litigation is of such nature? I understood the litigation is material enough. Okay, from the performance or overall materiality point of view. But is that of such nature that it will impact the going concern of the entity? If yes, then I can call that, the event and condition is indicating material uncertainty. But even, let's say, for example, there are events and conditions that cast significant doubt. But even if I say there is a very less likelihood of, occurrence for that, amount is big, likelihood very less. In that case, I may say that, events and conditions have been identified, but based on the audit evidence that I have obtained, I say there is no material uncertainty. Or I may say that, entity has plans in background. Let's say, for example, there was a litigation going on. Okay. That entity has to pay some huge penalties. Now that's an event and condition. An entity has to pay very material penalty. Okay. Let's say amount equivalent to the profit. Amount equivalent to the profit. Now the point is, if the amount is equal to the profit that is required to be paid as a penalty, then it's a huge, it can, impact the going concern. But what is the likelihood of occurrence? What is the chances of being materialized? I need to understand from that case whether the case will go in favor or in against. Let's say there are 95% chances that the case will go in favor of the entity. 95% chances that the entity will not pay up the penalty. But in that case, event is there, which is casting significant doubt. But because of 95% chances, the entity might not end up paying penalty, the likelihood of occurrence is less, and that's why I will not call that, you know, a condition or an event as a material uncertainty. Let's say if it was 50-50, then it was a material uncertainty for me because I'm not sure. So I need to understand whether that event or condition which is casting significant doubt is of such nature with respect to the potential impact and occurrence that it is casting material, that is indicating material uncertainty. Events could be there, okay, which are casting doubt, but I need occurrence also up to a some probability. Let's say, for example, I should have, more than 50% probability that it might occur. So there should be some uncertainty involved. But if I am sure that there is very less chances of occurring that event or condition, then uncertainty will not be there. I hope you guys are clear with this. I hope you guys are clear that not all the conditions, not all the events will result in material uncertainty. Clear? Clear till now, guys? See, let's say if it is 50-50 case, okay, 50% probability of occurring, 50% not. In that case, I am not sure. I am uncertain. And that's why I will say there is a material uncertainty. But again, it should be of that much magnitude and it should have a, at least 50% occurrence somewhere, likelihood of occurrence. That makes me unsure. That makes me uncertain. If anything is making me uncertain and it has such magnitude and requires a disclosure with respect to fair presentation and compliance framework, then yes, that is a material uncertainty. Clear? Any doubt, guys? Any doubt? I hope you understood what I'm trying to say, that not all the events and conditions that cast significant doubt will end up as a material uncertainty. So if you have events and conditions that are casting significant doubt, so I should write events and conditions over there along with significant doubt. Wait a minute. So events and conditions that events and conditions that cast, that may cast, or rather may, I will remove the may, cast significant doubt. First, you should have events and conditions that cast significant doubt. Then you should have a magnitude of potential impact. Then you should have a likelihood of occurrence. And you should have an appropriate disclosure as per the fair presentation framework and compliance framework. If all the four things are present, it's a material uncertainty. Okay. Now, once a material uncertainty is there, okay, as I told you, not all the events and conditions that have been identified will result into material uncertainty. But if a material uncertainty is there, means events and conditions have been identified that are casting significant doubt. Okay. Just a minute. events and conditions have been identified that are casting significant doubt. Okay. Now they are casting significant doubt, but I need to make sure whether material uncertainty exists or not. If material uncertainty does not exist, okay, I say there are events and conditions, but material uncertainty does not exist. Okay, then what I need to do is understand the requirement, okay, for disclosure of events and conditions as per applicable financial reporting framework. So if there is no material uncertainty, then you need to understand what is the requirement of reporting such events and conditions. Now, as per the applicable financial reporting framework, now that could change from framework to framework. Let's say, for example, when there is no material uncertainty, okay, auditor needs to understand whether there is any requirement in the my financial reporting framework, okay, to provide adequate disclosures about these events and conditions. Okay, so it may require to disclose like principal events or conditions, management evaluation of these conditions, management plans that mitigate the effect or conditions, significant judgments made. Okay, so in if it is the requirement, then you need to check whether such disclosure has been made. Okay, if again there will be two scenarios, yes and no. Yes, then fine, like okay, no issues. But no, then you need to consider impact on opinion. Okay, then you need to consider impact on opinion. Fine. Now that is something when there is no material uncertainty, but there are conditions and events only. Now let's talk about when there is a material uncertainty. When there is a material uncertainty, but okay, then in that case we need to understand the disclosure requirements. So if there is a material uncertainty, then as I said, material uncertainty needs disclosure. So the question will come is whether appropriate disclosure by management has been done. Okay, whether the appropriate disclosure by management has been done. When I say appropriate disclosure means disclosing the events that are casting, disclosing why these result into a material uncertainty, okay, and how the entity is dealing with these events. So that is something we need to check disclosure of this particular thing. If disclosure is made, I would say yes. Or there could be two scenarios, whether the disclosure has been made or yes or no. Okay. I'll take yes to the next page or no to the next page. If yes, then what you are required to do is add separate para with respect to uncertainty, or with respect to heading is material uncertainty, okay, related to going concern, and you need to draw attention to management note, management disclosure, plus you need to state why your opinion is not modified, why your, or you need to state that okay, there is a material uncertainty and your opinion is not modified, that there is material uncertainty and opinion is not modified. Why we are coming to the modification reason? Because let's say when I talk about material uncertainty, then at that particular point in time I need to show that my material uncertainty, with material uncertainty, the use of going concern basis of accounting is appropriate. So what happens is, let's say for example over here, I'll show you over here. So events and conditions casting significant doubt may result into material uncertainty. Now, once a material uncertainty comes, auditor needs to justify. Yeah, auditor needs to understand auditor needs to understand whether use of going concern assumption, going concern basis of accounting is appropriate. Okay. So first I will identify the conditions. If based on the conditions I think there is a material uncertainty, then I need to answer this question why or whether the use of going concern basis of accounting is appropriate. If yes, means I'll say there is a material uncertainty, but going concern is good. You can use going concern. But if I say there is a material uncertainty and going concern should not be used, means there is a higher degree of uncertainty, very higher degree. So in that case, I need to disclose accordingly. Okay. So I need to first, if there is a material uncertainty, disclosure is required by management. If management has made the disclosure, make sure you point it out towards, draw attention to that particular management disclosure, and that there is a material uncertainty and opinion is not modified. And this is when material uncertainty, but going concern basis of accounting is appropriate. Okay. Going concern basis of accounting is appropriate. Material uncertainty exists, but going concern basis of accounting is also appropriate. Okay. Now the second part, adequate disclosure has been not made in the financial statement with respect to the material uncertainty. Okay. Then what? Simple. Qualified opinion plus mention the reason in basis of qualified opinion. Okay. This is the one. Let me redraft a bit over here. Material uncertainty exists and use of going concern basis of accounting is appropriate. Okay. So that is the scenario. There is one more scenario. Okay. This is based on the material uncertainty, but there is one more scenario. When I say material uncertainty is resulting, or rather, I don't have a material uncertainty basically because, I am pretty much sure that, that is going to be issue in the going concern. So I'm saying that use of going concern assumption, going concern basis of accounting is not appropriate because there are conditions that are sure. There is no uncertainty. Everything is sure. There is no uncertainty in that part. So I'm very much sure. So use of going concern basis of accounting is not appropriate. Now, if that is the scenario, then whether management has used any other basis for accounting, okay, and whether the management has used going concern basis. Okay. So if management has used any other basis other than the going concern, like, reporting values on fair market or realizable value, like NRV or fair market value. Okay. In that case, evaluate the reporting basis accordingly. If management has still used the going concern basis when it was not appropriate to use, directly adverse opinion. Directly adverse opinion. There is nothing in between. And let's say, for example, in our scenario, what we saw is that, let's say, management said that, okay, there is a material uncertainty, but we see that, going concern basis is appropriate, and auditor was not able to verify that. So here, auditor was saying that we are not able to obtain sufficient and appropriate audit evidence regarding management use of going concern assumption. Means auditor is not sure that, whether going concern assumption is required to be used or not, and that's why they have issued a qualified opinion. Okay, because there is a material uncertainty, but they are not able to validate the basis of the management's going concern use of assumption. Whether they are not sure whether the going concern assumption should be used or not, because they don't have the evidence in their hand. And another thing is, this is with respect to the consolidated results of a particular entity. So they are talking about only one particular entity over here in the consolidated financial statement. So you need to see, when you are reporting with respect to the consolidated financial statement, you need to see what is the, totality of that particular, entity. What is the value of that total particular entity when it comes to the total consolidated numbers? Does that make sense to qualify the whole, consolidated financial statement if one such entity, is not shown appropriately? So you need to understand the materiality over here. Clear? So let me show you something if I have, just, yeah, I have one such report for you. Just a minute. So you need to see here this particular entity's, what do you say? Now I am just, just referring as if this is a public available document. I'm not pointing out any entity, so do not focus on the name. Okay, but I'm just saying you need to see what is the, numbers of this entity with respect to the consolidated financial numbers. So whether this is material compared to console numbers, console figures. If yes, then it will go to adverse. If no, then it will go to qualified. Okay. But when I talk about standalone, it is by default adverse. If the going concern basis is not appropriate, by default it is adverse. Okay. Any doubt with respect to this? Any doubt? Any doubt, guys? Any doubt till now? Any question, doubt, anything? No? Okay. If no doubt, then let me proceed further and let us see some questions on this topic. Or let's do one thing. Let me cover one last, quickly one essay summary, that is written representation. Not much. A few things we need to understand on that particular part, and then it's very small one. Okay, let's cover that one. Essay 580, written representation. So we have seen at multiple places, written representation, written representation. I'll just quickly cover because there is not much in this particular essay to discuss. Okay. So there are some areas where we are required to obtain written representation, and that you will see from essay to essay. So basically, if I summarize, okay, areas where written representation to be obtained, that is based on, you need to refer various essay for that, wherever it is there. Okay. So there are various areas, even essay 200, 210, everything, everywhere there's a requirement of written representation. I need to see essay to essay that, okay, what are the written representations that are required? Number two, format of representation. Format of written representation. It is always advisable that it, as I said, it is written. So it is always, supposed to be in written format. Okay. In a form of representation letter addressed to auditor. When I say in a form of representation letter means it should be written by management. It should not be that, okay, I'm writing that, okay, management, please confirm the below items, and management just signs on, yes, I confirm. No, it should be something, representing that I, the management of this company, we hereby provide the following representations to the auditor. This. So it should be in a form of representation letter addressed to the auditor. Okay. And again, if there is a doubt with respect to the representations, remember we saw if there is a doubt with respect to any of the evidence, doubt with one evidence with respect to any other evidence, in that case, we cannot, rely upon the representations. So let's say, for example, if management gave a representation, there are no pending litigations, but later on you identify a lot of pending litigations, then there is a doubt with respect to the reliability of written representations. Okay. In that case, you need to consider the competency, integrity, and ethical value or due diligence of management, their commitments. So you need to understand, with respect to the management, when you have a doubt on written representation. Let's say, for example, if I have a doubt, I identified something, that it's not correct, and management gave me multiple representations. Out of that, one got, not appropriate, or it was inaccurate rather. I need to understand why it was inaccurate. Whether this is because something, which is due to integrity and ethical values of management, or it is because of some, mistake from management side. If it is based on the integrity and ethical value of the management, then it will impact all the written representations. But if it is a factual or error, mistake or error or something like that, then it might not impact my other written representations. So I need to understand the reason for the inconsistency, inaccuracy, and incorrect representations. Okay. And if I conclude the representations are not reliable, okay, I need to, determine the possible effect over my audit opinion. Okay. If written representations are either not reliable or not provided, in that case, consider the impact on audit opinion. Okay. I need to consider the impact on audit opinion based on other procedures that I have performed. Clear? That's it. It's pretty small, nothing much with respect to written representations. Any doubt? Okay. So there is one doubt. Can you please describe the equation of material uncertainty with example? Sure, definitely. Okay. This one, events plus magnitude plus likelihood and appropriate disclosure. Okay. Let me give up with an example and let's understand in detail. So the equation says like, that events and conditions. Okay. So event is, let's say for example, company uh, breached an important covenant of lending agreement. This may result into immediate payment of huge amount. Okay. Now this is I'm calling as an event or condition because it is casting significant doubt. So this is event and condition casting significant doubt. Now, as I said, it involves huge amount. This huge amount basically is nothing but the second part of the equation. Okay, that is, it should have the potential, the magnitude of potential impact. Magnitude of potential impact, because it's a high amount, it will have a high magnitude. Fine. Now, a third part here is likelihood of occurrence. This may result, as I told you, as I mentioned over here, it's a word may. It is not necessary, it may result. So let's say it may result. May result in immediate payment. So likelihood of occurrence. Let's say, for example, I say there is a 50% chance, 50% chance that may result in immediate payment. And as there is a breach of covenant, I need appropriate disclosure also. So if all the things are there, this whole together is a material uncertainty for me. So this is a whole as a material uncertainty for me. Because I am not sure, I am uncertain because of the 50% chance that it may happen, it may not happen. That's why it's a material uncertainty. Now the question comes is, if this is a material uncertainty, then how management is sure that going concern basis of accounting is appropriate? For that, management needs to provide me some evidence. Let's say alternative funds arrangement, or discussion with lenders, or something like that, some other thing that they might negotiate, again, repayments or something like that. That is something, that is required to be understand from case to case basis. And if I'm satisfied, I'll say okay, fine, it's going concern basis of accounting is appropriate, good. But let's say, for example, if this is not appropriate over here, the management, whatever the management is saying is not good, okay, so this particular part I'm not sure, I'm not sure, or not able to validate. So material uncertainty is there. Management is saying because of this particular reason, I'm going, going concern basis should be used, but I'm not sure. I'm not, or not able to validate the reasons provided by management. In that case, I will say qualified opinion. Okay. Reason because as of now, I'm not sure whether there will be a impact on the going concern basis or not. I'm not able to validate. That's why I'm using qualified opinion. But let's say, for example, this whole example, okay, I'll copy and paste. Let's say this. Let's take this another example. Okay, same one, but I will modify a bit. So instead of 50% chance, let me say it has only 20% chance that may result in immediate payment. Now, as likelihood of occurrence is low, this becomes is low, I may say that this is not a material uncertainty for me. I may say this is not a material uncertainty. And this everything will not come into picture. So I will say no material uncertainty. Simple. Because events and conditions are there, but there is no likelihood. And if I make this as a third example, if I show you, okay, here instead of 50% chance, I am saying this is not 50%. This is, let's say, 80%. Now this is not the material uncertainty for me. This is material uncertainty, not only material uncertainty for me. No, this is not restricted to the material uncertainty, but this is, I would directly say over here, is going concern basis of accounting is not appropriate, because there is a high chance that they may end up paying huge amount, and there is no way that no alternate available. So I will add over here that no alternate option is available. Otherwise, if I say there is alternate option available, then I would again go into the category of material uncertainty. But As I'm saying, there is no alternate option available to me. Okay. I'm saying there is no alternate option available to me that makes this as a, use of going concern basis inappropriate. Now, if management still uses going concern basis, so if management still uses going concern basis, then I will directly issue adverse opinion. Simple. There is no second thought to this. Because the going concern basis was not appropriate and management has still used it. So three different scenarios, three same question, but with a slight different variation, making three different scenarios. Based on the likelihood, I am saying either material uncertainty exists, and if management says that it is appropriate to use going concern, then they need to give me the reason why. And if I'm satisfied, then I will only say material uncertainty. I will, disclose based on the a paragraph, and I'll draw attention to the note of the management. But if I'm not comfortable, I will issue qualified opinion. Second, there is no material uncertainty. There is nothing to be reported. Third, going concern basis itself is not appropriate, and management still uses adverse opinion. Clear? Any doubt? Clear with this, guys? Any doubt with this? Any question? Any doubt? No? No doubt? Okay. So basically, with practical examples, we understood, what is and how the going concern is there. Okay, so there is one doubt. What if the magnitude is less and likelihood more? If the magnitude is less, then again, how it is material for me? For me, to say as a uncertainty, I need materiality. If the amount is not material, then how it will become material uncertainty? So magnitude has to be higher. Otherwise, how it will be material uncertainty? And even, let's say, for example, if the amount is very low, first of all, it will not fall under the category of significant doubt. I'm saying significant doubt, individually or together with other conditions. It has to be of material amount. Magnitude should be high. Otherwise, it will be as good as other litigation or contingent liability. If, let's say, for example, your magnitude is low, likelihood is more, I might disclose, end up, as a contingent liability, or might create a provision. That's it. No further action is required from my side. Oh, from the management side. If management is not creating a provision, I may qualify the audit report. Or if management is not disclosing in the contingent liability, I may qualify the audit report. But if it is not material, then it becomes a problem for me. And unless and until it is not material, it will never impact your going concern. And SA 570 is about going concern. So it will be altogether a different topic for discussion. Okay. I hope I have answered to your question, Charu. Any further doubts? Any further doubts? Yes. So let's say, for example, if going concern basis of accounting is not appropriate, again the question comes is you need to have that thing already identified at the start of the audit. Let's say, for example, when you are starting the audit, at the time you sign the engagement letter, over there you agree with the management what is the applicable financial reporting framework at that particular point in time. If it is not the going concern basis, then you need to mention it there that on the what basis the financial reporting will be done, and on that basis you need to get it audited. You need to audit. So if it is something else, get it agreed at the time of engagement letter, follow, then that basis. Guys, in next lecture, I will be covering chapter 7, one of the very important part, because it is upon the reporting. So till now we were saying, whatever we have done, but that will come as a reporting part, like how we will report, in our audit report, in which paragraph, what is the content of audit report, what are the things which are required to be mentioned in audit report. I want you to read chapter 7 in detail before start of next lecture. Along with that, go through some audit reports which are publicly available, like annual reports. Perfectly fine. Go through that. Try to read that, because reading the real audit report will give you more understanding. Okay. Once you will read the study material and then you will read the actual audit report, it will give you more clarity. So I will also discuss the example of an annual report. We will discuss in detail, but I want you to also read the chapter and the audit report so that you can come up with your doubts. Okay. So I will be covering chapter 7 in next lecture. Please be ready with that. Okay. Be prepared. Ask your questions as much you can. And please, after the lecture, this lecture, okay, go and practice the questions which are given at least in the module. Okay. At the end of each chapter or between the chapters, there are questions given. Practice those questions. Practice other question and material that is available on the BOS website. Use that, and along with the lectures and session, try to prepare the chapter itself, so that later point in time, what will happen is, let's say for example, you are listening to the lecture and you will say, okay, I'll not do the preparation now, but I'll do the preparation later stage. But again, at that point in time, you might need to revisit the lecture, you might need to revisit the material again, so it will take your double time. Right now, whatever we have discussed, whatever you have read is fresh. Utilize that freshness of the knowledge and do practice and log that chapter. Done. So once you will practice, so your practice will be done, your reading will be done, everything will be done for with respect to that chapter or essay, and that will be logged. Now at the later point in time, you just need to revise the key points from that. That's it. Okay. Any further doubts? So usually that when the company is into liquidations, they do not use the going concern basis of accounting. That's the exception. Okay. If no further doubts, then thank you guys. Thank you for your time. I'll see you in the next lecture. Thank you. Hello. Yes, yes. Session over.